Welcome back from that short break. Very interesting talk that we are having right here on Econichat. Let's Talk Business with Mr. Daniel Steinman. Yield curve, that is very interesting how you actually did explain to us about you, like an example that you made. You buy bonds for 93. Let's just say, for argument's sake, like you said, 93,000.
Yeah.
And then you get
back 100,000.
100,000.
Yeah.
I love that.
Yeah.
I
But
love
only
that.
at maturity.
Of course. Like
this
after,
is the reason why the yields on the longer end is much higher than the yields on the short end.
Yeah.
Because and remember what I said, the short end is sold out. It's only some years into the future that you actually can buy bonds now, but in primary auctions, but there's what we call a secondary trade. Other people who have bought bonds in the past, they're very fond of selling them for whatever reason. But it's a liquid instrument. You don't list in the secondary market a bond for longer than 5 minutes, then it's sold. It's very popular.
Wow.
Yeah, especially with the large institutional investment managers, they're looking for that sort of thing. So if you're looking, there's a short end of the curve closer to the current time, and there's a long end of the curve. It's a gradual progression from now until 25 or 30 years from now, and there are a bond for every few years in that curve. And if you take all the yields and you plot them, and you will see they start at about 7.5% for the short end, the closer to maturity, and they go up to about 13, just over 13% for the GC 50 long end of the curve, and your capital is guaranteed. Now there are two things that I quickly need to explain.
Okay.
The first one is benchmark. The capital market does not operate in a vacuum. It is compared all the time to capital markets in the region, Joburg, Zimbabwe, Zambia, Botswana, even Angola to a lesser extent, because the big money in the capital market comes from outside, from overseas.
Yeah.
That's what we call foreign investment. Foreign investors, they look at what's the interest rate, they look at what is the yield comparative to the duration, that the yield curve, and the benchmark.
Yeah.
Whether it is a South African bond or whether it is a Zimbabwean bond, there's a whole set of benchmarks that an investor employs to form an opinion in his own mind about the return that he will get on his investment in a Namibian government bond. And this is a very fluid, it's a very liquid market. It's active all the time.
Yeah.
So benchmarks are very important. And we benchmark all Namibian bonds against comparable South African bonds. Now, the yield curve in Namibia used to be relatively higher than the yield curve in South Africa. We're talking about anything from about 180 basis points to 270, 280 basis points. A basis point is 1/100th of 100 basis points is 1%. So it's a measurement that one employs in investment, because the amounts that you talk about are so fantastically huge. So you measure the movements in basis points, 1/100th of a percent. So you can see that that's the reason why when you put in your bid for government bonds, you have to specify your yield up to 5 decimals.
Okay.
That is a 5 millionth of 1%. Because we're not talking about 100,000 to 200,000. We're talking about 500 million, 1 billion, 2 billion, huge amounts.
Yeah.
So benchmark is a very important tool to compare our yield curve to South Africa's. Ours was always a little bit higher, this 150 to, let's say, 270 basis points higher. And guess what has happened in the last 18 months? Let's make it the last year, since the oil was discovered. The South African yield curve and the Namibian yield curve, have basically converged. We no longer pay a premium on the government debt. The government debt has become comparably cheaper compared to what it was 24 months ago, and it is now, for all practical purposes, the same. The cost that the Namibian government has to pay for borrowing its funding is the same as what the South African government pays for its funding. And that is for the capital market to move 200 basis points. That's a big deal, Elsbie. That's a very big deal. That's why I said in the beginning, if you understand the yield curve, you just look at the graph, especially if you compare it quickly to the graph of the benchmarks, the South African bonds.
Benchmark, yeah.
And then you see, this economy is up and running. Things are happening.
Yeah.
And what I want to do in future talks is I want to discuss the reasons why the yield curve has come down.
Yeah.
Why it has become relatively cheaper for us to borrow in the capital market than what it was just a year and a half ago.
Okay. But I'm sure that a lot of foreign investment is happening right now because of the oil discovery.
Elsbie, when you see those amounts, your eyes go bling. It's unbelievable.
Yeah.
There's money flowing into Namibia that you cannot imagine. You know, until the discoveries were made, the government basically had to accept the yields that the investors offered. And it was, our money was expensive. 200 basis points is a big thing. Now, we refer to the government as a price taker. Now, the Bank of Namibia is very choosy about the yield that it would accept. So it's no longer a price taker, it is now a price maker.
Look at
it
us.
Basically prescribes to the market, we want to sell our debt at this level.
Oh, wow.
And there's the investments in government debt remains as popular as ever.
Okay. That's interesting to know. And that's also interesting to see that, it's going to be a good year. And it's going to be a good next at least 10 years for us in
Make
Namibia.
that 50.
Okay, there you have it. Thank you so much for joining in. And we have come to the end of EconoChat Let's Talk Business with Mr. Daniel Steinman. You can, of course, go to economist.com.na if you want to listen to previous talks. But for now, we will be talking again next week. Thank you so much.